I would say that where gold is holding, that would suggest that the market maybe thinks that the Fed will perhaps take a slightly slower pace of rate increases. I think from our point of view, when you look at the recent inflation data, which I guess is where most of this started, and we had a bit of a reaction in terms of precious metals moving up generally. I think from our point of view, we think that's perhaps a bit overdone. I think it's a bit of a sort of a short covering rally. And I think maybe gold and silver may struggle to hold on to some of these gains.
Okay, but we're seeing a lower US dollar. Wouldn't that help gold and silver here?
That's very true. I mean, it's obviously coming off sort of multi-decade highs. That I think is certainly helping to remove a bit of a headwind to gold and silver without a shadow of a doubt. But I think if you take a step back and look at expectations of where rates are going, look at expectations of where real yields are heading, which I think which is all about really. I think that suggests that maybe if we're looking ahead in the coming months and maybe into next year as well, that both of these maybe will perhaps struggle a little bit. I think the point you made there is absolutely key in terms of relative to other assets. So we've certainly seen, gold and silver outperforming equities, generally speaking. So from an asset diversification point of view, I think they have performed fairly well. I think the other key point is that in other currencies, they have performed exceptionally well in a number of key jurisdictions. And I think sometimes myself as an analyst, I perhaps get too focused on what the dollar price is doing. So I think there are a number of reasons to think that they have performed relatively well, even though on sort of intra-year basis, gold is down in dollar terms, is down 2%. But I think overall, I think we have to be, fairly happy with how they have performed. Okay. Well, some really good questions there. I think from a Bitcoin, from a crypto standpoint, I guess our view has always been that they served an important role from a sort of a speculative standpoint. If you're looking for an asset class, sort of a hedge against inflation or for safe haven, then I don't think really Bitcoin was what you were looking for. So will we start to see some move back in? I think it is possible. But again, I think the big headwind, come back to what I said earlier, is really where real yields are, to be honest with you, or where real yields are heading. Well, I think the reasons for the exceptionally strong Q3 figure that you're touching on are some of the reasons we've had strong buying in previous years as well. Namely, banks looking for perhaps to diversify the portfolio, moving away from the dollar, maybe looking at some countries where they've had some of their assets frozen, thinking about that. That's more of a repatriation argument. But in terms of looking to hold gold, I think these are some of the reasons we've seen for some time, to be honest. We've seen that over the past few years, because if you go back, sometime it was all about sort of Russia buying it when they were declaring their holdings. Then you saw countries like Turkey stepping in that we hadn't seen before and becoming an incredibly important buyer. So sometimes it's not always about perhaps the one or two that are buying sizable amounts. It's having sort of a handful of countries coming in, buying regular amounts, because some of these like Uzbek and others are perhaps naturally long gold in the sense they're buying up their local mine production. But of course that statement you made, you repeated that they've made, I think is really quite fascinating as well. Well, I think taking a step back, and whether it's Russia, China, or perhaps other ones, it's really difficult to say. I think the figures that we brought out, or we in a sense delivered to the World Gold Council who published them, most of that figure is undeclared. That's the challenge. So we're going to be quite confident about those figures. And I think, going back to your earlier question, whether it's the declared or the undeclared, it's really those key reasons that are driving that, whoever it may be. The thing about, Mellors Focus, and also my days when I was back at GFMS back in the day, because, Mellors Focus is almost 10 years old, but I've got a few more years, in the marketplace.
And I've known you all those years.
Absolutely. So, we start by looking at what the IMF publishes, but the figures has always been a combination of public-private data. And frankly, that's the same. I know it may be not as exciting when we're looking at recycling or jewelry demand or whatever it may be. We're fortunate to be in the position that people, some people are happy to talk to us on a private basis. And that's always the same way we look at our figures.
Okay,
from a gold point of view, the market tends to be in a surplus, but you also have, really sizable above ground stocks. Even in bullion form, a lot of that can be mobilized quickly, for example, in the ETF space, which is probably the absolute near market gold. So I think, when you look at the markets, we are seeing, for example, exceptionally high levels of coin and bar demand. The US has been pretty exciting. The likes of Germany has also been pretty exciting, but there are a number of other jurisdictions as well. But from a price standpoint, I think what's far more important is how the institutional or these speculative investors, that's where the weight of money argument is. And again, I think their primary focus, as we were discussing earlier, is where real yields are heading.
That's where it's at.
If you sort of step into the silver market,
right?
And again, you know, something we've spoken about for some time, Metals Focus, is the fact that the market has transitioned or is transitioning into being in a physical deficit. Something we haven't seen for a while.
Okay.
And again, the markets for demand are going exceptionally well. We talk about, again, the coin and bar market here. It's just going gangbusters.
Well, I see the premiums. You see the premiums on silver products.
Well, silver products is one thing, but even on something like a 4.9 silver is also exceptionally high, and it's been that way for a while. And then you add into that how the Indian market is.
Right.
And it's been going gangbusters as well. Yet still, yes, the price has popped up recently, but not that dramatically, really. Even now, the market for silver, or the price rather, is still down about 5 or 6% intra-year. And again, it comes back to where institutional investors are. They're still net short. As I said, you know, where we are, again, although prices have moved up over the past few weeks, and that's very encouraging, and they've also held on to those levels, both gold and silver. Again, we think that maybe that's been a little bit perhaps overdone, given that seems to have been a reaction to where maybe the Fed could, if not pivot, then at least perhaps, you know, take a more dovish tone to rate increases. Again, the fact that a lot of that seems to have been responding to a recent inflation reading, I think it's perhaps challenging or difficult to read too much into one reading. So we think that maybe there'll be a pause. And again, I come back to what we said earlier. And for me, it's just absolutely fundamental that, you know, where are real yields heading? And I still think they are moving higher, and that will be the ultimate headwind for gold and silver, at least for the foreseeable future.
Okay, so around what can you give us a range of price forecast for gold and silver 2023?
So I think if we look at first at gold, our average for this year is just shy of 1,800, which is pretty close to an annual average we had last year. We do think that for next year, you could have a handle beginning with a 17 or maybe even a bit lower for gold. And for silver, silver's a bit different. So silver has underperformed, you know, because of concerns about the recession next year, or developing recession rather. And as you know better than anyone, it behaves both as a precious and an industrial. And you're seeing that weakness in the industrial commodities as well. So even for this year, our average is about $21. And even that is down about, if memory serves me, about 16% on last year. And again, next year, again, you think about that weakness in gold. I think it'd be difficult for silver to ignore that. And so you could have a handle maybe down, it could be begin with an 18, or to be honest, I don't think it's any more difficult than the beginning of the pandemic.
Okay.
I think when we looked at back then, in the beginning of the pandemic, early 2020, we thought we would see such a flight into metals, but instead what you saw was sort of a flight into the dollar, and therefore initially the precious metals took quite a hit, if I'm honest with you. So I think this is no less difficult. I think what's really interesting is to see how they have behaved post-Ukraine, or that initial phase of Ukraine, and then it seems to be honest, distilling into those key macro variables. And that's why it's really fascinating that, you know, at the Silver Institute dinner, speaking about such record levels, exciting levels of demand for silver, yet trying to square that circle with how prices are behaving. And therefore, again, you are, I think, distilling it into, again, coming back to what yields are doing as well.